Ryan, welcome to the G2G Automation Forum. Just a quick backdrop of why we are here and what's the agenda for this forum. So when we kicked off the initial G2G forum a couple of months ago, we had a really great conversation about automation strategy and how should mortgage lenders embrace automation. One of the key aspects of that came out of that meeting when Matt Kendall, CEO of Arvest Bank Mortgage, presented it is, how did they go about building a sustainable process for automation, right? Which is looking at the entirety of automation, not just from an RPA perspective, but how do they really tie that back to the borrower's journey and how to approach automation more methodically. So we thought that, that had a lot of great questions, and we thought it warranted a dedicated breakout session for just that portion alone. So then we talked to Ryan Davis from Arvest Bank. Ryan will introduce himself in the coming slides. He's been leading the intelligent automation efforts and the process improvement efforts. So we'll talk about how Arvest approached this holistically and also dive down into details of how to make that happen. With that said, Ryan, over to you. You can give a introduction, and then we can get started.
Hello, Ryan Davis with Arvest Bank. I appreciate the chance to speak with you all today. I've been with the company since beginning of 2017, brought over to create a process improvement team. So if you're familiar with Lean and Six Sigma, that's my background. I'm a Six Sigma black belt. First took that up back in 2001 when I worked for a bank you might recall called Bank One. They ended up being acquired by Chase towards the end of my time there. So I was with Bank One and Chase for about 6 years, worked for BOK Financial for 12, and then been here for almost 7 years. And most of that time has been doing process improvement, process redesign type work. Spent a little bit of time in loan operations and risk management as well, but a real passion is process improvement. And automation came a bit later in that journey. I was at a process improvement in banking conference beginning of 2019, and I figured to be a lot of people like myself, process improvement people at banks, and those were there too. But really, most everyone was talking about this thing called RPA, which I didn't really know much about. But they were going on and on about how it was actually working for them. Sometimes some technology tools, you don't get what you expect from them, unfortunately, but they were really kind of promoting the fact that you can achieve great gains for your process efficiency with RPA. I came back from that with an epiphany that we need to look into that as well. Convinced the leadership team at the bank to let me build a program, and kind of been off to the races since that. It formally started in October of 2019, and I'll kind of get into a little more detail on the timeline later. But that's how I got started on this journey. I'm based out of Tulsa, Oklahoma, so right in the middle of the U.S. All right, let's talk about why we would even add an automation program. I view it as just another tool in our toolbox, literally, and we have different levers that we can pull to try and achieve process efficiency. And if you look at that, number one is really what I started with when I got here. Then we added on Greenbelt training and lean principles, and I'll explain that in case you're not familiar with what those terms are. I don't want to assume everyone has that background. Lean is, I would say, it's a methodology for waste reduction, cycle time enhancement, typically focused on that. It's more a facilitation and workshop based. So we'll do something like a value stream mapping event where we bring a team together and walk through their process to identify the pain points. Six Sigma tends to be a little more mathematical, where it's focused on really trying to gather some data around a process and get to the root cause of what the issues are. So that's most of what my background has been, those first three. Greenbelt is training others within Lean and Six Sigma to help themselves to fix their own processes. 4 and 5 are the new tools in our toolbox. Intelligent automation, that's automations that our team builds directly in our center of excellence for teams around the bank. Citizen development is analogous to number 2, However, it's automation focused where we're teaching people how to build some of their own automations. So we use all of those levers to try and attain process efficiency. All right, I want to go to the next slide. So why combine the two? And the reason why I bring this up, I've talked to a lot of counterparts at other companies in banking, financial services space, and other industries. And very often, I'll see scenarios where automation is primarily a technology initiative. And I'm not saying that's the wrong business model, but for us, we took a little bit of a different approach where it's really a combination of both. There's a technology element to it, but there's a heavy process component as well. The reason being is we want to ensure that whatever processes we are automating actually need to be automated. And very early on, 2019, when we were thinking about standing up this program, went to a couple conferences just to get up to speed. And I heard a couple speakers basically say something along the lines of that first bullet: never automate a bad process, redesign it first. And all of our automation opportunity advisors, that's our word for essentially a business analyst who's focused on automation, the people on our team who identify automation opportunities, assess whether we want to build those or not based off various factors, and then assuming we're going to move forward with it, they determine what the requirements are to build that out, map out the process. They're very often tweaking the process to make it a little more efficient before you automate it. So it's very rare that we automate a process completely as is. Maybe there are some steps in that process that upon further review, we don't really need to do, for example. So we'll cut those out. Go ahead.
No, I was going to say, I think it's a very important point, because most often than not, organizations typically go around with a hammer looking for a nail, right?
Mm-hmm.
And yeah, we have a license for an RPA, we have this OCR tool, let's try and automate now with what we have, right? Or most often than not, automation is just looked at as a customer experience angle of it, which is important. But a customer experience doesn't just stop at your point of sale, right? And it's pervasive through middle and back offices. And that's where I think some of what you mentioned here, lean value stream mapping, which literally goes across the life cycle to identify some of these automation opportunities, right? So I think, typically lenders and most organizations go for low-hanging fruits, which is not a bad thing. But I think, if you have an opportunity to optimize those, I think those would be great as well. So you make a really good point here.
Thank you.
Years of put out that. Yeah.
And absolutely, if I look at all the different types of projects we do each year, inevitably my favorite ones that I like to talk about are we convince somebody to just stop doing something. And I'm sure Arvest isn't unique in that regard, where a lot of companies just have processes that they've inherited over the years. And it's funny, you ask people, well, why do you do this step of the process? And the answer is typically something along the lines of, well, I don't know. Or we've just done that in the 7 years I've been here, or however long, or this is what so-and-so taught me to do, and she didn't know why she did it. So if you really kind of challenge them, very often you can just get people to stop doing needless work. But that's pretty easy to implement. You just have to convince them to stop it. So you mentioned value stream mapping a moment ago, Narayan, and we do those quite a bit as well. Exactly Ron's comment there. The way you've always done it is exactly right. Value stream mapping events, and actually, why don't we go to the next slide? We'll go into that. I think I have a slide kind of more focused on that, if you don't mind. Okay. And this is a picture from one of our actual events, just for fun, to kind of give you the sense of how this works. So interesting thing about value stream mapping, in my mind, considering where we are, October 2023, a couple years past a pretty significant pandemic, which changed the way we work. There were so many things that you really can do remotely these days. Prior to COVID, I drove 2 hours east to our home office in Bentonville, Arkansas, almost every week, spent a couple days there. I go maybe once a month now. A lot of, we've all learned some meetings just don't really need to be in person, so don't do it if you don't have to. But in our experience, events like this really are better in person. We're typically pulling people together for 3 or 4 days to really take a deep dive into a process and understand what that looks like. So, and Ryan, you used the term customer journey earlier. In my view, let's say you're talking about mortgage origination. I don't want to have just an underwriter in the room and a loan processor and a closer. Yes, you need those people as well, but you also need loan officers in there who can speak to the application process and the frustrations that customers have. You might need a title agent in there to understand that piece of it as well, because that's kind of the back end of the origination process. So you really need to have an end-to-end view with representation from each function in that process. And what we're doing there is, as you can see from the different colored Post-it notes there, is we're mapping out all of the steps in that process with input from the entire team. And then once you have that, then you use the different colors to represent things such as how long, what's the cycle time for this step and how long should it take, right? Where are pain points, something that customers complain about, or maybe the employees complain about? Is there something that looks like if you want to challenge whether you need to do that step, you might start that one and to kind of revisit whether it's a wasteful step in the process. You might tag something that this might be an automation candidate, right? So we're trying to classify the steps as we go. But the intent is, this is your current state. Based off those issues you identified there, what would an ideal future state look like? And trying to understand then what's the difference, the delta between current state and future state, and map that out with a team. And you typically walk out with a list of action items or potential projects. But again, you can use some online facilitation tools like a mural board to do a process map, but it's just not, you don't get the same effect and atmosphere as having people in the room. So that's something that, and we'll have people ask, can we do it by Zoom? And my answer is always no. I said, if you want the event and it's important enough to you, you can pick the location and we'll come to you, but we're going to do it in person.
So yeah, interesting you say that, because a couple of years ago when we launched Genius Works, which is an end-to-end suite of a solution, of a fulfillment solution, this is the exact thing we did. We pulled people all over the country, went to our Charlotte office and did that. And I don't think a Miro board or any other digital solution can eliminate that. The one question that I had of you is, in this is a process that is agnostic to the channel. And what I mean by that is how you expose that experience across multiple channels could be different. And this comes from my own personal anecdotal experience, of course. A few years ago, I applied for a mortgage with a lender. I obviously applied for it on the portal and submitted every single document that was asked of me, right? Then, 2 days later, I get a massive needs list and half of the stuff that I've already submitted for, right? And then there's a name of the processor in the email. So I call the processor and the processor says, oh, just ignore that email. I'll work with you directly. So there is a classic, what I call a channel dissonance between how the online perceives and how you communicate to a borrower vis-a-vis what's actually going on in the back end. So which is why I think value stream mapping, when done channel agnostic, helps you project the customer experience in the right channel, right? If it's analog and if it's digital and if it's online, call center. So I think that really is at the core of driving that holistic borrower experience in my mind.
That was a great example. And then you as a potential borrower at that point, we're thinking, what a clunky process. You're sending me a pointless email for information you already have, and I have to call in and tell you. Yeah, exactly. Those are the kind of things you would hope to uncover in an event such as this. So we do, I say we probably do about one of these a month. There's one next week. We're doing around account opening in our wealth management business for trust accounts. So we do these with some regularity. Again, they're typically in person.
Awesome.
Well, let's talk a bit about the team. And the reason why I thought this might be helpful to include in here, there might be some people in the audience, maybe they're pretty far on their automation journey, been at it for a few years, maybe some just getting started, maybe some haven't gotten down this path at all, might just be in the learning stage. This is how we set up the organization, just as an example of how one company tackled this. We have, if you look at, there's two groupings there. There's the director of process improvement side. That's me. And I roll up through the finance organization, ultimately through the CFO. And we have three different buckets of work, I would say. The one on the left, process improvement, that's what I call our traditional process improvement team. In other words, employees who have Lean Six Sigma training, and they focus on items such as doing value stream mapping events, root cause analysis, process mapping, and so forth. Automation opportunity, that's the team I mentioned earlier that does the assessment and due diligence for processes that we know we want to automate. We just need to figure out what that looks like to get the requirements ready for development. And then it actually, after that, if you look at it from a lifecycle standpoint, typically starts with PI or the automation opportunity team. Then it goes over to the automation engineering group on the right. That is, as you would think, it's traditional software development type talent in that group. And they roll up through our technology organization, and they actually build the bots, if you will, in UiPath, which is the platform we use. And then it comes back over to my testing and operations team to do some quality assessments of the code and then coordinate user acceptance testing with their business partners and deploy it in ongoing operations, or care and feeding the bot, as I like to say. So that's how we're structured. But it's, even though you have one side rolling up through technology and one through finance, we're pretty tightly aligned. I've already had 2 meetings today with the director of automation technology. So we're pretty tightly aligned with that team. For the people who work in office, we share an office in Bentonville, Arkansas. That's where we have all of our team meetings together, and we share common goals. So it's pretty tight alignment between these groups because it's a very synergistic relationship.
Right. And Ryan, I think you mentioned something important in the beginning of the slide. Is, you wonder where different lenders are in their automation journey, right? If they have automation teams. So I think this might be a good time to just take a pause and then run a poll to see where are the different lenders in their automation journey. So I was wondering, Robin, if you can run that poll, see what that looks like.
Okay, it is up and running. Give it one more minute here. Okay, I think we're just about there. Hold on. Looks like the winner being, they've automated some process, but they could do more.
Yeah. So the good thing is we don't have anybody who has absolutely no experience with automation. I think everybody is in some parts of the journey, with the majority of the lenders at least halfway there, right? I mean, they've started it, but they feel that they could automate more. Great. That's a great insight. If you want to move to the next slide, Robin.
I don't expect you to necessarily read all of that fine print there, but I just wanted to put this out there as an example of all the different roles that are involved in an automation. And this was noteworthy for me because when we were a traditional process improvement team several years ago, even though, let's say you might be doing, holding a value stream mapping event, or just working on a project that someone brought to you to help with a problem, you really had one person who was quarterbacking the project, if you will, and kind of owned it from end to end. I found that's not necessarily the case with automations. No one person can execute that project on their own because someone's doing the assessment and requirements gathering up front. Someone different is doing the software development. Someone else tests it. Someone deploys it. Someone monitors it ongoing. And in the very beginning, you might have had someone different that actually spotted the opportunity. So we have went to great lengths to try and really define what those roles are. So what are the roles within the team, and then who does what within the team? If in case you're not familiar with the RACI matrix, this is a pretty handy tool to define who does what in those different roles. So it stands for responsible, accountable, consulted, and informed. And we break it up into different phases. So new would be something that is just an idea, haven't really looked into it yet, kind of working through known and planned, where you're doing your requirements gathering and defining what needs to be done, all the way to active and then closed. And I will qualify this. We moved from a tool called ADO, Azure DevOps, for our project tracking, to Jira over the last few months. So we need to update some of the terminology here. But I just want to put this out there as an example of, if I'm an advocate of, if you're building an automation program and you're trying to move it from just getting started to mature, at some point, I think you'll probably have to tackle, what are the roles within your automation team? What does each role do? Who's responsible for each task? Who needs to just be informed, and so forth. So keep that in mind.
Yeah. And it's a great tool to ensure that stakeholders are aligned, right? Because there's no ambiguity with the AC matrix. So that's great.
Absolutely. And it's not a once and done exercise too. That's probably our third iteration. Just things you realize you missed something the first time around, but that's okay. Continuous improvement. Now let's talk about the timeline of our program at Arvest. I joined the bank beginning of 2017, employed number one in the team, I suppose, and then hired a handful of folks after that, focused on traditional Lean and Six Sigma type work. Again, beginning of 2019 is when we had the idea to create an automation program. Funny, so we'll talk about that. Start building IAC in October 2019. Funny story about the acronym IAC. Originally, we were going to call ourselves the Center for Intelligent Automation, but Human Resources said, well, we can't call ourselves the CIA. So we had to change it to the Intelligent Automation Center. Oh, well, you can only go so far with some things, right? Let me talk a bit about what getting started was like for us. Again, I did not know a lot about RPA or automation. I'm more of a process guy than a technology guy. I can learn, but I didn't know that much going into it. But I knew enough to be dangerous, I suppose. And from the research I'd done at a couple conferences, talking to people, just researching best practices online, I learned a couple things. It is probably more complex than you thought, and complexity brings implementation risk. And how are you going to account for that? And as a consequence, if you want to do this and do this well, you probably need to bring in an implementation partner, someone who's done this before, to help you get started. And in contrasting our approach to some other companies I've seen, I've talked to a lot of people at other organizations who I would say they took a slow roll approach, just kind of tiptoed in, maybe have one or two people working on some automations to see what it's like. Arvest was good about, once they decided to do it, we were all in, and they're willing to invest in building this team, willing to invest in finding a good partner to help us get started. But I was pretty transparent with them that we're going to have to spend some money before I can show you some money. But I think they had vision, which that's one thing I appreciate about the leadership team here. They had enough vision to realize this could really pay off. So they let us do that. We spent the summer of 2019 interviewing 7 different potential implementation partners. It was some of the large name firms you might have heard of, but we also talked to a couple of, I call them niche players within the RPA space, who were really just targeted on trying to help people launch automation programs. And we ended up picking one of those firms to help us. They came in October 2019. We vetted 3 different RPA platforms, settled on UiPath, and then started working to figure out, what does the structure of this team look like? How do we find these automation opportunities? Because again, none of us knew. It was new to us at Arvest. How do you build them once you've identified what you want to work on? What does the documentation look like? Governance, and so forth. They were with us about 6 months. We deployed our first use case around October of 2020, which is an interesting time to do that. If you think back, I still remember, I believe it was March 16th, 2020, was the day I was driving to Arkansas, and my boss called and said, the bank closed all the offices, turn around and go back. We're working from home. That's all I know for now, right? I think we all probably went through something similar with COVID at that time. But we still kept working along trying to get this program going. But again, we had that additional challenge in there of all of a sudden everyone went remote and we didn't really have the infrastructure for it yet at the time. And it also pivoted to an extent what we worked on. Our first couple use cases were for our, I guess I call it our back office deposit operations area of the bank. One there and then one in our wealth management space. But we ended up having this quick, urgent need to support some pandemic-related issues. So you all might recall a government program called Paycheck Protection Loans, or PPP. And we were trying to stand up, the whole company was trying to stand up a process for that in very short order, but we didn't have, it was somewhat based off SBA lending, but not exactly. So we had some rails we could use, but others we didn't. So there was a team in IT working on figuring out an origination system for that. But even that, there were some what I'll call last mile process steps that we still needed help on. So we threw together some small automations that I would call really not even process automation, but task automation, just helping to automate some of these little steps just to get this program in place. So we did several of those small automations that we didn't use very long, maybe 6 months, while we were going through issuing Paycheck Protection Program loans, but that happened during that time frame as well. We hired our first employees into the IAC team that spring, started trying to figure out structure and just really getting going. And it wasn't easy. No one who we hired had RPA experience, so we were all learning on the job, trying to figure out how this works. But we got through it, and had some small successes as we got going. If you look at July 2021, that's when we started to do what I call RPA Plus. Started to use RPA with other tools. And that's where I think you can have a real game changer with your RPA program. There's only so much you can do with RPA alone, where it's swivel chair processes, if you ever hear that term, moving data from system to system, copy paste from one electronic input to another. But if you're in the banking or mortgage space, then you know that there are so many processes that have a PDF document in there somewhere. Maybe there's a statement image. Maybe you downloaded a flood certificate during the application process and you get the PDF back from TransUnion or someone like that. Maybe you are receiving PDFs from other organizations that you work off of. OCR, optical character recognition, when we bolt that on with RPA, we could suddenly tackle additional types of processes where there's a PDF input. We need to read something off that document and then copy it into a system and then take some action based off that. And I would say we've used that many times since then. Ryan, your experience, do you see that a lot too?
Yeah, absolutely. I think just for context, in the mortgage world, where we have done a lot is, like Ryan said, reviewing flood certificates that come back from the provider, right? Or reviewing even various types of appraisals that come back from the lender. So these are classic cases of what Ryan calls nicely as RPA plus, where typically the input for RPA is digital data, but here you're digitizing the data that's sitting inside a PDF and then feeding that to a bot to automate transactions. So it's very powerful. And there are plenty of use cases in the processing and in the underwriting and in the communications world, change circumstances, things like that. A number of use cases there that can be applied with RPA plus.
Let's move to beginning of 2022. That's when we had our first citizen developer class. Let's talk about why we started a citizen developer program. Just as in the traditional process improvement side, we had set up a Six Sigma Greenbelt training program early 2017. And the rationale for that is I had this team of Six Sigma Black Belts, which can work some projects, people that do process improvement full-time for a living, but we can't be everywhere at once. What if we taught people around the company to do some of their own process improvement, teach them the principles, give them some tools they can use. Maybe they can't tackle everything, but they can be places we aren't and improve some of their own processes. We had pretty good success with that. We have generally done one green belt class a year since 2017. We've also started doing a yellow belt class, which is a a bit slimmed down just to give people something more quickly. It essentially it takes out a lot of the statistics, but gives them a lot of the same lean principles to at least do some improvements in their area, and then they can go into a greenbelt class if they want. But we had good success with that, teaching people how to use lean and Six Sigma principles to do some process improvement. What if we taught people how to do some of their own automations? Because it's the same concept of our IAC team will automate as much as we can, but we can't be everywhere at all times. And we have a threshold, if you will, of what we can take on to automate. What if you have something that maybe it's not rising to our level of materiality, but for you at your desk, this is a pain point. What if we could give you some tools so you can save yourself a half hour a day, for example? And we taught that first citizen developer class beginning of 2022. A little tough to figure out the right level of detail to give with those folks working through the right training materials, but I think we kind of have that down to a science now. We use three developers now from our technology partners, the automation development team. 3 developers from that team actually provide the training. So they know how to use UiPath very well themselves. They're the instructors for our citizen developer classes, and we are doing a class a month now, have been for about a year. And as I recall hearing from them, we have a wait list of about a year out to get into that program. So we had a lot of interest in citizen development. And in a couple cases, it can be a source of opportunities for us. Maybe someone who is trained in citizen development understands what automation can do, but it's just beyond their ability to build that. There's just too much complexity. And they'll hand those over to us to complete the automation for them. Now we're getting into 2023. And let me talk about that comment. 3 Scrum teams plus a 4th for maintenance. Why a 4th for maintenance? I mentioned earlier, I learned some things just from going to conferences when we were getting started about what is an automation program supposed to do? How do you run it well? Another thing I heard, besides never automate a bad process, is I heard a couple speakers make statements along the lines of, if you're not careful as you're building automations with RPA, and every automation you build has some small probability of breaking, or maybe it was built appropriately, but just something in the environment changed, meaning it doesn't work as it did anymore. There's always some chance some will break. So as you deploy another automation, the chance of something breaking increases that you'll have to deal with. And lo and behold, after you've reached some critical mass of automations out there, next thing you know, you'll realize your development team is spending all their time fixing existing automations instead of building new ones. We ran into that ourselves. It does happen. I promise you, you will reach that point. And we started really focusing on that, I'd say in early 2022, a year before this. And we would do a rotation. For instance, we would have one of the developers focus for the week on fixing bugs that came up in our automations. We were able to keep it somewhat under control. Ultimately, we conclude, though, is this probably needs a dedicated team. We had so many automations already out there at that point. It needed to be a focus area for us. And our team had grown to the size we were going to break up into multiple Scrum teams anyway. So if you're familiar with Agile principles, we follow that methodology. We have Scrum teams, follow the daily stand-ups, retrospectives, and so forth. We carved out one of those teams just to focus on maintenance, to maintain all the existing automations. And I think that's worked really well for us. In the last few months, I've noticed that our cycle times to tackle bugs has gotten much better. And actually, this team's gotten it under control enough that they actually have time to do some new builds as well, and not just the maintenance work. So that's been a success for us. Another March of this year, back to that RPA plus kind of idea. Some other tools that we've really started dabbling in pretty heavily this year are in the task mining and mapping space. So the reason why I'm excited about those is that you can use these for a couple things. Task mining is really more I'll call it a discovery tool. You use something like that to more systematically observe work that employees are doing, assess that work in the process, with some algorithms, such as how many systems are being used, how repeatable are the steps, trying to define the if then else logic to get to the answers. It'll scale it for you and score it and determine if this looks like an automatable process. So that's helpful for us, because otherwise it's really word of mouth, or if someone just happens to observe something, this is a more systematic way to get to automation opportunities. And then task mapping tools are, let's say you're looking at a process you've already identified as a good candidate for automation. What we would typically do historically, and we still do a lot of this as well, is we would have someone from our team sit down with you, observe your process. The other associate walks them through a few transactions, and then we map it out in Visio, Lucidchart, something like that. This is actually observing behind the scenes and mapping your work as you go. And it gives you a much deeper, more robust view of the process. Here's a good example of one of the processes we did in our bank operations area this summer around new account opening and setup on a system. Our task mapping tool watched 800 transactions over the course of a week for this team. If we did that the human way, you probably would have watched 5 or 10 transactions and called it done. You just can't sit there and watch someone for or a team for an entire week to see their work. So that's something that I don't think we're that far on the journey yet with task mining and mapping, but I'm pretty excited about the potential so far. We're about 6-7 months into it.
Awesome.
All right, let's talk about the life cycle of an automation, just to give you an idea of the steps involved in this. And I mean idea literally, because at the very top there, that's what it starts with. Someone has an idea for an automation that can come through different means. Maybe it's anecdotal conversations. We're starting to get into task mining as well. Then there's an assessment. And the reason why assessment is important is just because a process is automatable doesn't necessarily mean you should. Back to tying this in with process improvement, we do have, it doesn't happen a lot, but we do have some conversations where someone brings an automation opportunity to us. When we look into it, we really kind of challenge them back, like, well, why are you even doing this? Do you need to? And sometimes we can convince them just to stop doing the work. But on the other hand, maybe it is a legitimate process we need to do, but perhaps the transaction volume is just so low that it's really not worth the time to build it. Because this automations aren't free. You're paying for a robot license to run, or part of one, to run an automation. There's some cost for the team to assess it, to build it, deploy it, to monitor it ongoing. So they're not free. So we do have to make sure that they're at least worth some minimally viable threshold before we'll automate. So that AOA team does that, and then qualifies it if it looks like one we should do. Analysis and solution design are your, so what's your as-is process? Think about your future state process for the solution design. One thing we do quite a bit in solution design, which we didn't do in the beginning, but we have a lot in the last year and a half, these RPA tools are originally conceived of as automation with the user interface, how the human would do the work. But very often we found we might have an API that directly integrates into some system, and we'll just use the API to go in that way. So we'll tweak, again, we're tweaking the process very often just to make it run better in an automated fashion. Then there's development, actually building out, the traditional software coding, as you might imagine, and then testing to make sure it works. Then you go live. So that's our typical life cycle for automation.
So Ryan, I had a question on this, right? Can you talk through how much of this is top down versus bottoms up? Because you also mentioned citizen development, right?
Yeah.
So,
yeah.
So does the citizen development occur after an idea has been approved and, and they then go out to build, or they then first build and then show a POC of how that happens? And how much of this is really top down? Strategically, here's what the organization wants to do from an automation perspective. So let's get this done versus bottoms up, opportunities that you see on the field. So help us talk through that.
I would say it's a bit of both, and I'll explain what I mean by that. We'll use our mortgage business as an example. Matt Kendall, who was your speaker at the last one of these meetings, who's president of our mortgage company, he's a good sponsor of automation and helps to, remove roadblocks if we're having a challenge, or can kind of push the team, hey, let's see where we can use these tools. but I don't necessarily look to Matt to bring us the opportunities, although he has brought us a couple. Where he helps is put this out there with his team, set some goals for, let's see where we can use RPA, where we can leverage tools like that to make our processes better, but help us find the opportunities, and really bring us those ideas usually comes from people at a more grassroots level, I would say, who have some familiarity with how the tools work. And we see that in
Yep.
other parts of the bank too, like our loan, our small business lending area, consumer lending, deposit operations.
Awesome.
All right, and this is again, if I know we have some folks who aren't that far on a journey yet, but there is some assessment needed to figure out whether you should even automate something with RPA or not. Because another reason why you might rule one out is maybe, boy, this is a really messy process for this team, and there's a lot of volume going through it. So it's certainly an expensive process, but maybe you can't automate it, at least with RPA. You have to have just a few. There are some elements of a process that must be in place for it to be a good candidate. Again, I'll walk through a couple of these. Highly manual and repetitive. We're trying to help people get rid of some of the tedious work that they do over and over again. Rule-based, and here's why rule-based is important. RPA is an automation tool. It is not an AI tool. It cannot think or anything close to that. However, if you, let's say you could write it down on like a, you're in Excel and like an if-then statement, it might be a complicated one, but you got to get it down to something like that, right? To where it can, some sort of a rule to define a path to do the work.
Yeah,
But
I'm so
if
glad you talked about it, because there's a
Go ahead.
lot of misnomer, right? About
Mhm.
RPA, AI, machine learning. RPA is not
Yes.
AI. It's rules based, it's repeatable, it's high volume,
Yeah.
right?
Yeah.
Yeah.
And we have some processes where let's say you're looking at this process, let's say it has 37 steps, and you can't automate the whole thing because there's this element of human judgment needed in the middle. But what if you can do task automation for the work that you can automate? And we see that, and we've done that in a few cases as well. So like, let's say your anti-money laundering team, filing currency transaction reports. We've done some work around that area. There's an upfront data gathering piece where you're gathering all the data elements that you need to assess whether we need to file this currency transaction report with the regulators. There's an analysis piece in the middle to make a determination whether we need to file this one or not. Then once that's been decided, then file it with the regulators. You can do the front end and the back end with automation pretty well. That middle part, where it's a critical task for a financial institution. Do we file this one or not? We're at a place where we still want a human to make that decision. At some point, maybe there will be tools down the road that can get closer to judgmental type work.
Yeah.
But now we didn't feel comfortable with that, so we left that with a human.
Yeah. Another thing, when you mention about what is a typical good RPA use case, there's most often than not, there is a blanket opinion. Oh, we like to use APIs, not RPA. But my point is they're not mutually exclusive, right?
Sure.
There is a place for APIs and there is a place for RPA. But the first thing that you come up is, oh, no, we only want to use APIs. So we're actually putting out a paper in the next couple of days. It'll be very interesting to hear the feedback. And, we believe that both actually have to coexist in an effective environment. So automation environment.
So question for you, Narayan. I noticed I talk a lot. We got about 15 minutes left, but half the slides left. Let's think about what would be most meaningful for the audience. I've got some parts coming up about different use cases we've done at the mortgage company and at the bank, kind of where we get the opportunities, some of my lessons learned. What do you think the team would like to hear here?
So I think definitely, a walkthrough of how you conceptualized an automation initiative, right? One use case, and then walk through the life cycle of that so they can get that framework in their heads.
So talk through some actual use cases?
Yeah.
Okay. Can we go forward, I think, 3 slides? Yeah, right there. Yeah, let's talk through some of these. And these are in the mortgage space. Let's start with this. And notice how I have this broken up into two categories: one-time use projects and ongoing process automations. In my own naivete, got started on this, I would have figured we would only be automating ongoing process work, much to my surprise. And I'd be curious if others find this in their work on automation journey too. But a lot of what we've done has been one-time projects. So you're only using it once or for some defined period of time. But the volume of work going through that process is so significant that it's worth doing it. And these have actually been, from a financial value standpoint, looking at the time saved for the people doing the work, bigger than a lot of the ongoing work we do. And let's talk through some of those and how they came about. Data movement for servicing system replacements. Arvest just finished about a year ago a migration from a very old servicing platform we'd had for a long time to a newer, more cutting edge platform. Very large project. I'm sure some people here on the call have been through that. There's a lot of work going involved in that. And for the most part, that project went actually very well. But we had a challenge of the antiquated system we were on. It wasn't an efficient way to get all of the account documents out. So statement copies, the original application, things of that nature. And the way that platform worked is it would bundle these into massive PDF files with thousands of pages. Who had that logic in me? I don't know, but it kind of unworkable. Now humans could do that and go open this PDF, which opens slowly because it has 1,000 pages, and then kind of save it apart, right? Save these 3 pages because they're this document, then pages 4 through 7 and so forth. But it would have taken an unfathomable number of hours to do that. Is that, or keep this system live indefinitely until the runoff of the portfolio because none of those accounts are left, which would be years. We found a way to do that with automation. And it was from a time standpoint to do the work, the biggest one we've had so far, just because it ran for months just to churn through that, because I think we had over 5 million account documents to break apart from these big PDFs. And then another one, delivering documents for our loan sales. So others might do this too. Maybe you have a MSR portfolio. Maybe you sell some of those loans to optimize your servicing portfolio. For instance, we had a couple buyers that wanted their documents received in a certain way, needed some manipulation to make that happen. We did that with RPA pretty quickly. Let's talk about that third one. The reason why that one's noteworthy is that is one that came from citizen development. So we talked earlier about, Ryan, you asked if that could be a source of ideas, and it is in some cases. Early this year, one of our citizen developers who's trained in our mortgage business noticed a problem. And because he had been trained in citizen development, that popped into his head, I think I can tackle this with citizen development. Problem being, in that servicing platform conversion, 99% of that project went great. However, for some reason, it was either I think it was the beginning balance for the year for all of these, for a large segment of mortgages, the beginning balances were incorrect. So therefore, it messed up the 1098 forms where you report the beginning and ending balance and how much your interest and principal payments were. And this came to light, I think, about a week or two before the deadline to send these out. And he did find a way to fix that type of an error with citizen development, but he needed scale to get that done. I forget the number. We had like 70,000 1098s that needed to be corrected and mailed out by that time in a week. So he brought his automation to us, our COE team. Our developers rebuilt it to run a little more efficiently, and then we threw a bunch of our licenses at it because we have a large pool of unattended robot licenses at it to knock it out over a weekend. But we would not have known about that very likely if we didn't have citizen developers trained in mortgage who understand automation and know where it can be used. So that's another compelling reason, I think, to have a citizen development program. Let's talk about a few ongoing processes here. We do that too. They're not all one-time events. This third-party services was one of the first ones that we did, and this was kind of an obvious one, I think. I assume a lot of people here are familiar with some of these processes where after the loan officer takes an application, then you have some tasks you got to check off the list. You need to order a tax transcript for the borrower to make sure they accurately report their income. Order a credit report if you haven't already. Order a flood certificate, pull that into the system, take action on that. We call those third-party services.
Yeah.
It's very standard rinse repeat process, easy automation.
Yeah, and I was going to say these are the most popular type of bots that our clients have implemented with us: flood, fraud, title appraisal, 4406C, collateral desktop appraisal, right? Any of these. So these are super simple and rules-based. There's very little variation, right? So it's easy to automate these ones.
Yep. And then why don't we actually, let me move forward. Let's go to some other parts of the company. Just talk through real quickly some of these to think about. We do a lot of work in the rest of the bank as well. In case we have some people on the line who work in other parts of financial institution, just to give you some ideas. Commercial lending, we assume some people here have heard that the LIBOR reference interest rate that's tied in with a lot of commercial mortgages is going away. And we of course, we were a commercial lender as well. We have loans tied to LIBOR, but which isn't necessarily a problem in and of itself. But the challenge is two things. Is there a replacement rate referenced in the loan document? And are we sure that we have identified in our core lending system all loans that use LIBOR? Because we knew there were some gaps in that. So the options were have a whole bunch of human beings pull up every commercial loan document we have, see where the LIBOR is referenced in it and whether it has a replacement rate noted, or find a way to systematically do it. We found a way to do that with RPA and OCR to basically look for LIBOR within the documentation. So that's one we did on a one-time use, but it was the entire commercial loan portfolio at Arvest. And we talked about paycheck protection program, some task automation to help with that. We had some ongoing automations as well for our home equity line of credit product in consumer lending. We produce the disclosures that are sent out after each application and deliver those out to the applicants. In wealth management, it's in wealth, but it's really kind of a risk management process. Yeah. There are some transactions. This is kind of a unique security type where if you sell it too far in advance of maturity, there's kind of it could look like the customer, because it has a high upfront load, it could look like a load fee. It could look like did the investment advisor encourage the customer to sell early to then sell them another security? Maybe they didn't. Maybe there's a legitimate reason to sell a security, but regulators frown on those type of transactions. We built an automation to review the transaction logs and find those, and then it goes a step further and auto generates an email to the investment advisor to ask about a specific trade. So lots of interesting little use cases you can come up with RPA. And then deposit operations, we do a lot of work there. I just put a couple, but fraud reporting to Visa, decisioning in disputes, we do a lot in that space these days. Fertile ground.
Yeah. No, I think these are great examples. And I would say, don't overlook one time. You made a very valid point there, right? Especially in the servicing world, there are tons of reconciliation that occur even on a monthly basis, right? And it doesn't mean that you can only automate transactions that occur on a daily basis, right? These are voluminous processes that occur at the end of the month, right? You're just comparing data between MI carriers, you're comparing data between investors and what's in your servicing system. You just, just doing a whole lot of such reconciliations in the month end, escrow, all of these. So all of these can be automated with RPA, and those are some of the use cases that we are working on right now. So that's a really good call out, Ryan. Right?
Thank you.
So I think, given, we've obviously covered a lot and, great outstanding content that you put together. I was wondering, what would be the takeaways? What are some of the lessons that you have learned in your journey of automation over the years?
Sure. I've got my top 5 list here, the things that really stand out to me. We learned, number one, quickly, not trying to disparage any automation software providers out there, but if you follow their advertising, they all say they'll use words like low code, or it's so easy, or an automation for all employees. In our experience, that's not necessarily true. even with our developers and everyone on our development team went through several months of training before we really let them loose to go out and build some automations. And they're just difficult sometimes to figure out how to automate this process, because very often we're working in various different systems and some of them interact with an automation platform differently than others. And it is harder than advertised. It's not to say don't do it. I'm not trying to discourage you, but you're going to need some technology talent to do it, and you're going to need to get proficient in it. Number two was an eye-opener to me as well. We have built several automations that a business partner within the organization came to us and pleaded, please automate this process for us. We don't want to do this tedious work anymore. It's frustrating. Please automate this process for us. We build it to their specifications. We deploy it. It's ready to go. And then we monitor it to see how much volume is going through, and it's not being used. This is change management 101 right here. It surprises me how often this happens. This is not a one-time event I've seen. It's been several times where we build something and they don't use it. Ryan, you see that sometimes too? It's just,
yeah, absolutely.
People change.
Yeah, which is why we always pin down to say, let's get into a mechanism of ROI measurement on a periodic basis. Because if you're spending money, if you're running automation, and if you're not getting the ROI, then that would sitting there. And it's not just, it just doesn't just cannibalize what you're doing, but it also jeopardizes your future initiatives, because you then start to lose confidence in the whole automation framework in itself, right?
Absolutely, absolutely. Number three, this ties in with why we set up that maintenance team. Keeping your automations up and running can become a lot of work once you have a critical mass of automations deployed.
I can agree more with you. It's so critical. People think it's, build it and it'll keep running. But you never know. People change processes all the time. People, your LOS provider will change a button somewhere. It'll break. And we have seen lenders who've used tools dictated by their corporates that went out of the market. The RPA broke. And for 6 months, it didn't work. And they released the people who were doing the work because they've automated it. And because they couldn't maintain it, the entire function was down for like 6 months. So that's a very important point when you consider automating. Will you be able to sustain a maintainable automation program after you build it? It's not just a one-time effort.
Absolutely. I'll close out with these last two. We talked, don't forget about those one-time use automations. Just because it's not ongoing, it still might be worth doing from a value standpoint. And we do track the value of every project we do a 6-month look back. Those are often the biggest. Last but not least, make sure you gather all those business requirements up front. And we've learned this the hard way. I think we're better at it, but not perfect, where maybe you've already developed it, you're in testing, and the business says, oh, we forgot to tell you about this. And I won't pin that entirely on our business partners. We need to ask the right questions up front to make sure we're really trying to extract that information. So it's on us to really try and get that on our team.
Yeah. These are some great lessons, very practical.
All right.
Very real. All right. So I think, Robin, that's pretty much of, we wanted to cover. Hopefully this helped educate the audience on how Arvest undertook an automation program, not just as a scatter shot or as a, looking around for nails when you have a hammer in your hand, but it's a more holistic approach, how to set up an automation team, how to set up the strategy, and then how do you then drill that down into customer journey, lives, value stream mapping, and then down to eventually implementing a tool and a methodology, right? So we'll obviously share this, there's this knowledge with everyone. Great, I'm glad we could have so many of us join. Any questions from any audience that we could take? Robin, over to you to close it out.
Yeah, the only question that I had was, if, are there other automation solutions besides RPA that Arvest has deployed? I think you mentioned a couple early on, but I think most of the ones we talked about at length were kind of RPA focused. So
there are others out there, and I won't presume that if anyone wants to automate, they can only use RPA and they can only use UiPath. I would say that's the main thing we're using within the company, but there are some similar products out there. We are a Salesforce organization, rolling out more use cases for that. They have a program called MuleSoft, which is kind of like an RPA platform. Not really using it much yet, but I think once we roll out Salesforce further, I would not be surprised to see more happening with MuleSoft. Our integrated account servicing team, which is basically loan and deposit operations to a large extent. They have another platform called Nintex, which can't do everything UiPath can do, but they can do some lower level automations with that. So there are some other tools out there. And then even on top of RPA, we bring in some things that we can use supplemental to it. For instance, this year we've been using a task mining tool called Mimica that we use to then feed automations into UiPath.
Have you had any experience sort of automating the compliance or Q&A type of tasks and processes?
QA, like the testing of software, that type of QA, or something else?
Well, more like compliance, I think. More like compliance. Like regulatory compliance issues, automating those can be a little bit more sensitive and challenging. So I thought I'd ask if Arvest has had any experience.
Yeah, compliance and quality control, essentially, I think is what
that type of QC.
Sorry, QC.
We have done some of that. Yeah, for instance, one that I thought was really interesting, a HMDA related process for the loan activity register that we have to submit to the regulators. That was a very clunky one for us. And because of the amount of work it took to do the stare and comparing data fields between the mortgage platform and what our compliance system is proposing to report to the regulators, our compliance team would only review 25% of the loans. And so there's always some inherent risk that you might have missed some, but it's basically a large sample to see what the loan pool looks like before reporting it out. But knowing that when the regulators come in to do their review, there's a 3 in 4 chance they're going to pick a loan we haven't seen. We worked with our mortgage systems team to build a better process for that, and got it to where they built a report up front that does that stare and compare for you. And then the compliance team, the actual analysts, only review the exceptions, the ones that don't match. And that went from a 25% review to 100% review. So they review the entire population and less time spent doing it. So that one was a good win, I think, for the compliance team.
Okay, great. And I have one last question for you. I think a lot of folks get a little bit nervous actually trying to deploy automation. They're afraid of the failure and like maybe screwing up some of their processes. And I know you do some testing before rollout. Are there any suggestions you have on how to help our mortgage lenders or servicers overcome some of those fears that they're not going to break the whole system if they try it, you know?
I can certainly appreciate that. That's where you can't underestimate the value of testing, right? The value of testing and having a competent development team to do the coding up front, making sure you gathered all the business requirements, and making sure that you have competent testers to test this before it deploys. I think part of that, the challenge we really see is missed requirements. You deployed it, and you're doing user acceptance testing, and oh, we forgot to do this. That's what we tend to see more than, you know, this broke the whole function. But another principle maybe I'll leave you with in that regard is if you're going to automate this end-to-end process, break that up into, I'll call them more bite-sized chunks. For instance, we have a process step to create your work items, to process your work items, to send your work items. So therefore, if a piece breaks, you don't break the entire process automation. So that's one thing we try to apply as well. Other organizations I've seen automate this whole process that takes 7 hours to run. Well, then you have to start the whole thing over if it doesn't work. So do not do that.
That's a great point. Thank you. That's an excellent suggestion. And I think that concludes the Genius to Genius Forum. And we are very grateful, Ryan, that you agreed to come on and provide that deeper dive. We had a lot of requests at the end of the last forum for a more breakdown of how Arvest accomplished what they did. And so I'm very grateful to you and to the whole entire Arvest team for sharing your knowledge with us today. And thank you, Narayan, as always, for hosting this wonderful forum.